My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we have a lot to go over. Markets are falling again. And if you've been following along for the last couple of weeks, I've been warning this is going to happen. We are starting our correction, possibly even a cycle top in the markets. We've gone over the risks that are involved in the AI trade, from data centers being halted because of lack of power to even overestimating the depreciation of chips being bought to artificially raise the hyperscalers' profits. All right. All of this combined, smart money is taking note and they are dumping, while the retail investor generally is still conditioned to buy the dip. We have to be smart here, folks. Again, the key is the charts. No BS, just charts. So let's get into it today, folks. Taking a look. This is the S&P futures. You can see that this was yesterday's price action. So we started the day, popped up a little bit, came down, popped up, and then we had the big sell-off into the mid-afternoon with a small bounce into the close. Overnight, we dipped lower and we're trading down a little bit. Notice right here, the low yesterday during market hours is virtually where we are currently trading in the futures going into the open. So again, it is interesting. We'll open, at least as of now, and we don't open for about 29 minutes on the stock market, but right now we're trading very much around yesterday's lows pre-market. Now, the big factor here, let's go to the S&P and check in on the weekly chart that I've been following. This is one of the charts that I brought to your attention that has alerted me to give you the heads up that we could be facing a bigger pullback than just 1, 2, or 3%. All right. It is a potential cycle high chart. Looking at the chart again, we can very clearly see we have our COVID lows down here. Our bear market lows give us these hits right in there. And then our liberation sell-off low right there. Our bull market high from 2021. And lo and behold, right there. The question is it a cycle high or just a pause before a breakout? Now, we all have our personal opinions, right? But the charts teach me to be very logical. One of the things I always say to you guys in these My Trading game plans is to trust the level until proven otherwise. What that means is that it's a top on the market because every past scenario has shown us that this parallel is valid. If it fails, which any chart can, then we say, okay, now it's no longer valid. The markets can continue up technically until the next major level. All right, so always remember that. Let the chart do the breaking to the upside or the downside. We should never assume it will, even when the chart is maybe pointing to that direction. All right, so again, let's watch and see. As of now, we continue to kind of come in on the weekly chart. One thing that's catching my eye here, folks, notice the weekly lows are almost all in alignment. All right, so again, these are weekly candles, right? We're looking at the weekly S&P chart. Now, the reason why I'm paying attention to this is that if we put a trend line basically through these lows right here, they are all into that level. I mean, look at this, the low, the low, the low. They're virtually at the same spot. The reason that's important for me as a technician is it gives me a level to watch for a near-term breakdown. If we start trading below 66.37, 66.35 on the S&P, we are likely going to go straight down to 65.50. That would be your next technical level right there. All right. So again, we can watch this and monitor it. Listen, if this holds, maybe we could float back up. But again, we're still going to meet major resistance at the parallel. By the way, a great example of a double tap on a parallel can be seen in silver. Do you guys remember that chart that I've shown you guys, how I was able to call the near-term top on silver and even shorted it again when it did a double tap on that parallel? Let's jump into that chart now. Usually I don't look at that till later on, but I think it's so important to kind of reinforce the thought process on these charts. All right, so if we go to our chart and we zoom all the way out, look at what we have here. All right, it's another parallel, and the parallel has literally given us the major lows on silver and the major high, and potentially right here, the first hit and the pullback, the second hit and the pullback, potentially another major high. Now, I still remain bullish mid to long term on silver because again, I just don't think our government is going to get its act in order to get fiscally responsible, nor will pretty much any other country. In all fairness, it's just what these politicians are conditioned to be: just spend, 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 so re-election occurs. But the point being is that as of now, we trust the parallel on silver, we trust the parallel on the S&P until proven otherwise. And you can see here was a hit, pulled back. This was actually a pretty nice pullback on silver from a technician's point of view. This was a 16% drop, and then we went right back up to double top, and we've pulled back again. Now, on this chart, there's a couple things you can look for. If we break this low right here, this previous low right there, then we're probably headed down to the 43. That's kind of been 43, 42, maybe even $40 per ounce level. If we break here and confirm, well, guess what? 60 to 62 is your upside. So again, notice how as a technician, I look at both sides of the coin. I don't just say, oh, well, I really want this to happen, so I'm going to ignore, basically the bear case or the bull case, whichever one it may be. It's important for us as real investors and traders to be analyzing both sides because we get a much clearer picture of looking at what potentially the risks are of a trade. Also, where to exit the trade if it's not working out, which is something we all struggle with, including myself. Okay, let's get back into the charts. Going back to the NASDAQ 100, this is a very important chart, folks, because this is a confirmed breakdown on the QQQ. So we can see right here, we closed below the trend line parallel. So here's another parallel, just a much shorter distance, right? This only goes back to May versus the other ones, which went back years. We closed below this candle. We did not confirm the breakdown. This close yesterday, we did confirm the breakdown. Now, what does that mean? Does it mean that markets will never bounce again? No. The markets could easily bounce up, but it means this level will be major resistance, and you ultimately expect lower lows to be made and a continuation to see to the downside. So again, I repeat, the QQQ has confirmed a breakdown, the NASDAQ 100. What's so fascinating about this is that we are coming right into Nvidia earnings tomorrow after the bell. And so again, does this make me think Nvidia is going to get crushed on earnings? Not necessarily, because even if Nvidia goes up on earnings, it might just cause this chart to retrace back to the underbelly of that resistance. So to be honest, as Nvidia now has pulled back significantly, and let's jump into that chart real quick. So number one, Nvidia still has not confirmed a breakdown of this trend line, but it is significantly off its all-time highs now, right? If we do a measurement on distance to see the percentage, as of yesterday's close, we're down 12%. With today's level, we're basically down 13 and change percent. So we are down off of those highs, but we have not broken this trend line just yet. I'm very curious, excuse me, to see where it goes today going in and tomorrow going into earnings. Does it hold the line? Does it trade like this? Or does it break and confirm going into earnings? And again, this is going to be the earnings heard around the world. The reason why I say this is the most important report from NVIDIA is because we're starting to see cracks widen in the AI trade. I've talked about this. I mentioned it at the beginning of this broadcast, right? You have the hyperscalers over depreciating or lower depreciation over 7 years. When I did research, I was like, and I looked into all of this, and I'm like, well, what's the value of a 2-year-old chip, an AI chip? And it loses 90% of its value basically in the first 2 years. So that's, again, when you're losing that amount of money on a chip you bought 2 years ago versus saying, oh no, we're going to spread that over 7 years, it really alters your earnings significantly. Like, think about a $100,000 chip depreciating over 7 years. So that's what, 15,000, 12, whatever it is, 14,000, whatever it is a year in depreciation versus 50,000, which is the loss if you take it in a 2-year period, or even let's be fair, 90%. So they still, listen, this is the kicker. These AI chips, for a hyperscaler, they are worthless after 2 years. For you and I, they're probably pretty darn good. So, I mean, again, you and I aren't going to pay 100,000 for a chip or 50,000 for a chip, but can these chips still be used for retail like me? Yeah, they probably are pretty good still. But again, that's at the 10th of the cost at that point versus the new technologies. And so, listen, the pausing of data centers, there's just no energy. And this is one of my biggest pet peeves. And I said this to you guys before, but how ridiculous is it that you and I are going to have our electric bills go up like 2, 3 times to power AI, which will then eventually take our jobs? Like, think about that logically. It's kind of messed up. But ultimately, my guess is they're not going to be allowed to just take the power and jack up the price of energy for us all. And that's why we're seeing a lot of these data centers being put on hold. All right, these are all possibilities. And then you go back to what we've seen as well. And I'll just mention this, we'll get right back into the charts. But, when the money's getting pushed back and forth, where Nvidia is giving OpenAI 100 billion and OpenAI is buying 100 billion of chips, and, Oracle's doing this and getting this back, and AMD is doing this and getting this back. It's at a certain point, you have to start to say, what's wrong here? And listen, if valuations on these AI stocks were lower, I'd actually say buy them. But when you price in your revenue and your profits till 2030, and that's where the stock is priced, that's my issue. It's the valuation. So remember, listen, we can make a big deal about, the depreciation of this. Well, at a certain price, the hyperscalers are a great buy. At a certain price, AMD is a great buy. At a certain price, Nvidia is a great buy. It just doesn't fit the mold of hardcore analysis. It doesn't go through the test, the smart test here. All right. Back to the charts we go, guys. I do have some charts here. I quickly just want to review this one. This is your weekly chart on the SMH. Speaking of topping signals that I alerted to you guys about 2 weeks ago or so on this market, 102% above the weekly 200 moving average. We saw a 45% fall on the SMH. Here's your weekly 200, 102% we got above right here. And we had a 40% fall. And lo and behold, we got 102% up. What's this fall going to be? Is it going to be 20%? Is it going to be 10? Is it going to be 40? Is it going to be 50? Just to get back to the 200 weekly moving average from the recent highs would be a 49% drop in the chart of the SMH. Now, again, I'm not saying, by the way, I think it's important to recognize that the moving average will slowly grind up. So in reality, this is going to slowly go like this, right? And so eventually, even if this goes like this, it's going to be higher than 49%. But the idea is by past factors, looking at 45 and 40, we can kind of get a general sense that we could be looking at as much as a 40% correction in the semis. All right, let's go on to some stocks that are nearing buy levels, guys. So listen, I've been saying we're due for a pullback. We're getting it. Believe it or not, within this bigger pullback, I'm going to go long stocks. Now, certain ones, and they have to be chart related. And this is really where it gets interesting. So I still think the S&P is going to do a 10 to 11% correction, the NASDAQ about 15%. But there are certain stocks that when they hit levels, they should bounce. So as a shorter term swing trader or day trader, I've got to be ready for those, right? So let's go into some of these guys. Take a look at Meta. Meta has a great level around 575. It's only around $18 away, something like that. That's not a big move on Meta. You might say, well, where's this line coming from? Look at this beautiful trend line. The October 2022 bear market low right here at $85 connects through the liberation sell-off tariff low. That should be a bounce level around 575. So again, this one, I'll be looking to play. Now, just to be fair, if I buy it here, let's just say I buy here, am I going to look for this? Nope. Not in an overall potential cycle top. What I'll do is I'll look for this, maybe back here to these lows, and then I'll exit. And my guess is eventually we break lower. All right. So again, you always want to plan, have realistic targets in your trades. Not like, oh, well, I just hope I'm going to be a zillionaire by holding this, so I'm just going to close my eyes and pray. Unfortunately, that doesn't work in stock trading. At least it hasn't for me. All right, so that's one of them. Amazon, by the way, look at this great trend line that marked the top on earnings, popped right up there, and then fell sharply. Amazon should get a bounce at gap fill at 222 and change. That might even hit today. It would only be, for me, that's only a day trade. It's not a big enough drop. But what's interesting here is you also have a trend line right through here that basically is at that same level. And so again, right here, look at these two lines, how they intersect right in this 222 to 220 area. That should be good for a day trade. If you're really aggressive, maybe even holding it overnight, I might look to maybe hold it for 24 hours, try to get a little bit of a bigger bounce, but that should be technical support. Dell here, folks, has gotten rocked. down almost 30% just in the last few weeks. Part of the issue here is the data centers are now like, oh my goodness, the cost of memory for our data centers is spiking, hurts margins. And this is the whole thing through the cycle, right? So it's, again, you just have to understand the margins are slowly going to erode for all of these players, right? So if we look at Dell, there's a very significant technical level right down here, 118 to 116. Look at these pivot highs right here, and then the low and the lows right through there. So I will be looking to nibble on Dell at around 118 to 116. Robinhood, I've been talking about how this was going to break down. We've been talking about the 101 to 100 even number, gap fill right there. That will be a tradable level, even maybe a quick swing trade level. All right. So again, my point is this. I want you guys to fully understand that a good investor or trader is neither a perma bull or perma bear, right? A good investor and trader looks at the chart and says, wow, this is ridiculously overbought. The logic behind it is false, or at least there's cracks in it. And the chart is telling me it is running out of steam, whether it's negative divergences on the RSI, whether it's double top, whether it's a trend line or a parallel, right? And then you say, okay, I'm going to look to play this on the downside. And then once it pulls back significantly, now we start to say, wait a minute, what a sell-off. We know the psychology of the investor is to buy the dip, and we're down, let's say 30 or 40% off of our highs in a straight line. We're now coming into gap fill. Let's buy it for a bounce. And again, the mentality isn't like, oh, I'm going to hold this for 40 years till retirement, or 30 years or 20 years. This is much more shorter kind of trading and investing, where I grab my financial future in my hands and I can dictate it much better than just the hope and pray methodology. All right. Let's go on, guys. Bitcoin flushed overnight. Now it is below this major trend line here that goes back to the beginning of the bull market, but this is key. Ask yourself, did it confirm? Hasn't confirmed yet. So it's not a confirmed breakdown. Now it could confirm today, and I'll be watching for that. But right now, it is bouncing off of the lows. We got down to about 89,000 in the overnight. It's back to about 91,200. I'm going to be watching like crazy. Now, this needs, like, if you're Michael Saylor, you want this to hold, because if not, it's going down to 75 to 73,000. All right. Now, I did nibble one tiny little bit right here. I'm down on it slightly, but that's okay, because my next buys are already in motion. I'll be adding a little, probably around 80,000, and then a bunch right in this vicinity. And again, please understand, I'm not a hodler. I'm a trader, right? So I'll be in and I'll be out 10 more times in the next few months. But ultimately, I'm giving you the game plan of what I'm looking to do with Bitcoin. All right. ETH, by the way, did not hit its major level. I was looking to buy. ETH got very close. I'm hoping for one more flush into this level. You got this beautiful parallel, downsloping parallel, and this support area right here. If we can get one flush to, let's say, 28 to 2,700, there should be some good support. Gold is catching a bid today. To be honest, gold's getting a little boring for me. That's okay. It needs to digest the craziness that we've had, right? Ultimately, if we look at gold, what we know is that it's just trading between resistance and support. And so you hit resistance, you pulled back. You hit support, you bounced. Now the bigger question is, well, which way does it break? Does it break 38.90, in which case we start trading down, possibly as low as 3,600 to 3,500? Or do we break 42.50, retest our all-time highs, and potentially head towards 5,000? Now, ultimately, I think we're going to 5,000 next year in 2026, but I do still think there could be a little bit of flush out yet to come for the weak-handed. The markets are weird like this. It's almost like they're a living, breathing entity. They tend to want to get the most people bullish and then flush out the weak hands. And I just don't know if the weak hands have fully been flushed out just yet on gold. You guys know I'm holding a lot of gold longer term, but I'll certainly trade it long and short, just like silver, in the near term. And that works as a hedge, right? It either doubles up my position on the swing trade side, so I have even more long, or it hedges my long position if I think it's coming down by going short gold in the near term. So again, it's a kind of a cool little thought process there. All right, let's go on here. We looked at silver already early on, looking at that parallel. Let's quickly go to oil. Oil had that cup and handle, which is a bullish pattern. It is still holding that cup and handle pattern. So again, just be aware, this is not a broken breakout pattern. Listen, it's a bullish pattern, but unless it takes out this line, it is just a pattern. It's not a triggered pattern. And that's really, really important to understand. What's the difference between a triggered pattern and just a regular pattern? Natural gas pulled back yesterday. Let's see what it's doing today. It's inching a little bit lower, a little bit of a pullback. My guess is this is just a pause before one more big move up into this zone. I am not buying it here, and I'm not short it. But again, I'm waiting patiently to see if it gets in this zone, in which case I will look to trade it accordingly. All right, time for just a question or two. You guys know I do my best to answer one or two questions every day if I have time. So let's go to the first question here. First question, is there a head and shoulders on OKLO? Let's take a look at that here. Let's flip back to the charts and we'll type in OKLO. This is that uranium nuclear play. Oh, by the way, look at this. So look at this on the chart, of the daily chart. I have a good support area right here. Now, I think it could go a little bit lower. So the answer is yes, you have a head and shoulders on this. So does everyone see it? So shoulder, head, shoulder. Okay. And by the way, it's already triggered. So it broke the neckline right here. So it already triggered. So to be fair, you're probably a little late to the punch if you're not already short. In fact, you're now into some technical support. I have not bought this yet. I have one more level. I'm hoping that the fear this week maybe pushes it down to about 85 here. Notice this former pivot area right here and here. That would be another level. Now again, I wouldn't fault anyone for buying a little bit here for a bounce. But again, keep in mind, the head and shoulders is the dominant pattern. That tells us down the line, this is going a lot lower. But in the near term, as a swing trader, I'm starting to get interested in this chart. All right, let's go to the next question. Next question is, could you chart Polygon? Sure. POL, I think, is the symbol on that, right? Polygon on Coinbase. Let's take a look. Let's go to our bigger time frame. By the way, you can see this little wedge. You had the breakout, but now it's really coming in. By the way, this is exactly what a lot of these altcoins are doing. They are just grinding lower mercilessly here. All right, so first things first, what we can see is at least since it's been on Coinbase, this is now at new lows. Do you guys see that? So we had this beautiful little support area right through here, right through that low, right there. It has now broken lower. Once that happens, we have to start looking for parallels that will give us a sense of where this could go. One thing I'm seeing here, you have a downsloping kind of line here. And again, I'm doing this for the first time. There is, so we could look at this, right? You could make a case that maybe here to here, and you almost hit it right there, maybe right in this area, around 13 cents or so. And then we can look for a breakout. If it ever breaks above here, that could be a very, very good breakout on Polygon. But again, not to spend much time on this, but I mean, look at names like Chainlink. They're just breaking down. This one still has a pivot low to go to, but the altcoins have been struggling so much. Look at Avalanche here real quick. Avalanche, look at this. This low is borderline, still hanging on. But if this breaks, I have a big level I'm looking to buy around $11.50 to $10 right down in this vicinity. In fact, it even goes back a little bit further. So again, suffice it to say, the altcoins are really struggling. Listen, there's always a few that are doing well. ZEC's had a great run. Zcash, although it's looking like it's starting to crash back to earth. But again, when if you see the stock market topping out, you don't want to be long altcoins because de-risking occurs first. And even in Bitcoin, right? Bitcoin topped about 6 weeks ago. Now the stock market's starting to fall. Same thing happened in 2017. Bitcoin topped. 4 to 6 weeks later, the stock market began to fall. 2021, Bitcoin topped. 4 to 6 weeks later, the stock market began to fall. And so we've seen that de-risking occurs in these higher risk assets first. People start to get a little gun shy, and then it spreads to the stock market and so on and so forth. Now, the positive is once risk comes back in, those can bounce. But again, the question is how long will this risk adverse nature in the markets last? Maybe Nvidia can change our minds tomorrow after the bell. You guys have a great one. Thank you so much for coming out here today. Don't forget, share with friends and family. That's all we ask here at Verified Investing. Spread the good word.